Mira Business FM.
Mira Business FM, I'm Tim Elliott. This is the Morning Drive, and it's money now. Financial scams have been making headlines recently. Two stories in particular have made the news. And here to discuss further is James Thomas. Now, James is a Dubai-based independent financial advisor and consultant. James, good to see you, as always.
Yeah, great to see you too.
Nice to have you here. Look,
Thanks.
I wish you were here under slightly more auspicious circumstances rather than having to discuss people losing perhaps livelihoods and life savings.
Indeed, it's always horrible to hear such things. And the numbers involved are so large that...
They are. I mean, these are huge numbers. The thing is, and I guess before we go any further, where there's money, there is potential fraudulent activity. The thing here is, I think a lot of us kind of think, well, how the hell do you get yourself in that situation? But, you know, everybody wants to grow their wealth. Everybody wants to get on. And if that's the case, then there are the less scrupulous around. It's that simple, isn't it?
Yes, in a simple, like I say, it's just as always has been and always, sadly, probably will be, where there's a great headline, a great story, further stories and spun around that, and people are parted with their monies, and it's really, really sad when the reality strikes.
Well, I mean, you must come across this quite a lot. I would guess. I mean, it's funny, we were talking yesterday about the least liked professions. According to a new survey in the UAE, financial advisors were nowhere near the top, but traditionally
we're there, or thereabouts.
You are
yes.
Unfortunately. So,
Yes.
so you come across this, and you can understand why. And, you know, I understand what you will have gone through. You've been in the UAE for what,
21 years.
21 years, okay. So you don't have a suitcase, you're not ready to leave the country.
No,
with
very
somebody's
much
money.
established here, own property, planning to be here for many more years.
Okay, well, that's a good thing to get across immediately, but you will have come across people and will have come across these stories before. The promise of high returns is the lure, isn't it? So if somebody comes to you and says, I've got exactly the scheme for you, come and see me, come and sign on this dotted line, what's the first thing that you should think about?
Well, the first thing to think about is that classic line, it looks too good to be true, it probably is. If someone's offering you many multiples, we've just heard in the news there that US interest rates are now 4.2%.
Yep.
Someone's offering you 16 to 18%. How is that being generated?
Yeah.
Yes, obviously that's a cash rate, so that's if you like a baseline, but you're being offered 4 times and more than that. How is that being generated? Yes, of course it's possible in certain instances, but if it's them with all sorts of other, no catches, no timescales, alarm bells need to start ringing.
Well, this is the thing, and if they don't, I suppose you have to ask yourself, but it's really easy now, isn't it, to... some people are very good at selling. For some people, it's a very natural thing. And it's very good to be able now to back up that selling with a nice, very professional-looking website. It's very easy to put out the right messages on social media.
Absolutely. I mean, as you rightly say, in the past, when I arrived 20 years ago, the websites were there, but they were far more basic. They were far more difficult to set up and to put that information on. I know I'm sounding like a real old man here, but it's true. As you rightly say, Facebook, Instagram, we're still at their very beginning. Their marketing around those was just simply not being used and utilised to the way they are. They can be incredibly powerful tools for good and sadly for bad. And if you're able to build a really great story, put some beautiful pictures of some buildings or the before and afters, people will see that and think, yeah, great, I want a piece of that. And sadly, that's the reality is not always quite what the pictures portray.
I mean, it used to be, didn't it, that you would trust the guy in the pinstripe suit because he looked like a banker or a financial professional. But it's
here's me in my suit today. I know it's
old habits die hard.
Old habits die hard. Absolutely,
yeah.
and I guess the alternative, if I am just in my civvies. Am I as professional? This day and age, probably. But I always still think, going to work, put a suit on, and you're in business mode.
I think that's probably common thinking. I mean, from the other side, if you're there in your beachwear as a financial advisor, that probably doesn't work. But many would argue,
maybe it does
times,
now. Yep.
Times have changed. I don't know, but it does point to the fact that you need to think very carefully and use judgment. It seems to me that's the first thing to do. If somebody says to you, I think 15 to 18% returns on this, there's absolutely no risk, it's fantastic, and it's starting to sound too good to be true, even if you're swept along with a great sales pitch and somebody that looks great in a great suit, you have to be able to separate the emotion.
Well, the irony is, with a lot of these, my understanding is that the person in the suit was never even met. It was all largely phone, online, whatever it may be, rather than in person. Now, I could be wrong there, but that's certainly my belief. So it didn't even get to that point of seeing someone in person, because you can then look them in the eye. You can then actually have a more detailed conversation, I would suggest, and actually get a flavour for what that person is about. If you come to see me on a professional basis, I'm going to ask you lots of questions. How long have you been here? What are your circumstances? What are you trying to achieve? Do you have children? Are you looking to put them through university? Where are you planning to retire? There's many questions that we would ask before we get even anywhere near talking about products or returns.
You see, that's a really interesting point, because that points to KYC, doesn't it? It's not just incumbent on the advisory service, the consultancy firm, the financial firm, to understand their clients. It's for you to understand the advisory firm. What I'm saying is this is a two-way street, or should be, and it's perhaps more important to be sitting there thinking, well, you're asking me a lot of questions about my background here. Why do you want to know all this? Well, you need to know that so that you can tailor.
And again, if we're being very, cheesy, but we have two ears, one mouth. And my job is to listen to you, because if I understand what you're saying and have asked you lots of questions, I am going to build a financial solution for you that is tailored for what you're looking for. I'm not just pulling out my briefcase, here's a wonderful brochure, this is the answer to all your questions. That's simply not the way financial planning works, in my opinion.
Okay.
And yes, we will ask lots of questions, because you've intimated there that we're also audited on a regular basis. We're regulated in a high level here now in the UAE, which is a great thing. We have auditors will come in and they will just pull random files, virtual files now, and look at what the advice that's been given. They will ask why particular products have been recommended. They will actually, so it's not just as well as the advice that you're given to be, to the highest standard that I believe I can offer, but there's someone behind me looking at that. But even before we get to that, we now have to have a compliance department. You would get a call from an independent compliance member of our team who will ask you, have you understood what you're signing up for? Right. Do you know what the term of the product is? Do you know how much you're committing to save for? It's not simply just sign here and it's a far more involved process.
So if you get a call from a purported financial advisor and you think, well, this is interesting, and I sign up, if you don't get that, the alarm bells should go. I mean, the point is, isn't it, that to be an independent financial advisory firm here in the UAE, it's a lengthy process to get the license. It's a very expensive process.
Very much. Millions of dirhams have to be submitted to and held on accounts.
5 million dirham bond?
5 million dirham bond, yes.
To be able to offer financial advice.
Yes. And then once you've done that, you then have to prove that you have members of staff that are qualified and providing those support functions of compliance and of KYC, of making sure, again, where that money has come from. And the regulations around that, again, are very, very strict.
How often does anybody say to you, when you meet a client or a potential client, how often does somebody say, well, can I see your resume, sir? Can I see your qualifications? Can I see the license of the firm that you work for? How often does that happen?
Sadly, not as often as I would like it to.
And you would be happy to show that?
I would be over the moon.
Right.
I think I've sat 20 plus exams, almost one a year over my my career, varying subject matters and varying levels of difficulty, but nonetheless, we have to have what's called a level 4 qualification, or certainly be working towards that, which is offered by the CISI, the Chartered Institute of Securities Investments. And yeah, I'd be delighted. I would be happy to it's very, very sad, but, I've gone to the trouble of sitting these exams to make sure that I am of a high enough standard to provide advice in this country. And yeah, I'd be over the moon to be able to show that to you. And also, come to our office, come and feel, touch, come and sit in an office within our office down at the H Hotel. And you can see on the wall there are our licenses. They're proudly displayed because, as I say, as we mentioned, they cost a lot of money to get, and they cost a lot of time and effort to keep them. So we want you as our client to know they're there and feel confident that we're going to stay there. Because again, that's another part. If there were to be any issues with the advice that was offered, that's your comeback. That's your protection. That's who you can lodge ultimately a complaint with, and they will investigate thoroughly to make sure that, or to see whether there was any misadvice that was given.
Okay, so the first of the stories, I mentioned this at the top of the hour, it was a UK company selling structured notes. So that's basically
structured
a vehicle,
notes.
isn't it?
It is a vehicle. It's a cover-all term. Structured notes can be great and they can be bad. Another term that's often used, bond.
Yes.
Bonds cover many, and again, the wonder of financial planning, that there's many acronyms and words that are bandied about that people don't really understand. So that's the first part I would suggest, is if you don't really understand what you're placing your money into, be cautious.
Exactly. So there's a UK company selling structured loan notes secured against UK properties. The returns promise 15 to 80%. So really what's happening is your investment, you're loaning money to this firm, they're buying properties, they're doing them up and selling them on, and in theory giving you some of the proceeds. And you can see why, on the face of it, that seems to be a good thing, because property traditionally moves up in value, and in certain areas, in certain countries, it works very well. We're in the UAE, the real estate market is booming and has been booming for some time. So the attraction and the pitch, the sale...
it's a very attractive one, there's no doubt about it.
It seems to be. However, it's the number of people, 3,000 people, 200 million pounds sterling, £1 billion dirhams at stake here.
Yeah, it's vast amounts of money. But again, with all of these things, as we see, probably you've ever watched any of these property shows, they don't always work. Maybe you've bought in the wrong area. Maybe the value didn't go up quite as much as you'd hoped. Maybe you discovered way more work that needed to be carried out on that property than you had previously expected. A friend in the UK has got a 100-year-old house. Suddenly, there's all sorts of talk of the structural issues. Well, the house has fundamentally been standing. It's survived 2 world wars. It's sound. However, rules change, regulations change. Suddenly, this house now needs to be to a higher standard, or certainly been assessed to a higher standard. And all of these factors can very quickly eat into the returns that are being offered. Also, you will often find that not only is your money being used, but the company will borrow. And that's where often the real issue occurs, that these investors have given £1 billion dirhams, but they may well have then used that as collateral to borrow another $1 billion, as an example.
Okay.
Which is fine if everything's going upwards. But if there's interest to be paid, the project overruns, those loans get called in, there's suddenly the liquidity of the investment suddenly completely disappears. Okay. There is no money. And as someone said to me today, you can't just sell the door if you need a bit of money, or the window, or one room. You sell all or nothing. And if it's not selling for whatever reason, there's no money. And that's often what happens with these types of structures, is that even if there isn't anything nefarious, which it would seem there could well be with this, but as I say, that's still to be proven. But it's a much slower process, and I think that's probably one of the other key points to bear in mind. Property generally is a long-term play.
And this scam, on the face of it, seems to be a relatively long-term play, or I guess was planned to be a relatively long-term play, because some investors did get some form of return, which I guess is another way of keeping people in.
Again, sadly, it's a very common sales technique, in the sense that the early investors get a little bit back, or if you've made a relatively small investment to test the water, after a period of time, 3, 6, 12 months, you're then given your return. You think, oh, this is great. You then invest an awful lot more because you think it's safe. That's what they're fishing for, is to get your much larger investments.
Okay, so what you should expect when you meet a financial advisor, let's leave that to one side for a moment. You meet a financial advisor or somebody with a plan for you, you should expect to be asked questions to establish your position, where you want to be, where you want to go, what you're saving for, what you're investing for. And you should be able to ask questions about the company, to see licenses, to see qualifications, to ask relevant questions to you. However, what kinds of questions would be a red flag, do you think?
It's not so much questions, but it's
Or statements.
Statements, yes.
Yeah.
It's a limited time offer.
Okay.
Get in quick before it finishes. This is going to close soon. I mean, again, it's one of the little analogies we always use in the office. Everything that we recommend, there's no limit to them. There's always life insurance. There's always a savings plan. There's always a lump sum investment. The vehicles do not expire, or they don't have a limited time run.
Right.
We can work at your pace, not my pace.
Okay.
So when those sorts of questions start being, or not even statements, but people start pushing you and harassing you almost, that to me is the red flag. Okay.
So don't let yourself be pushed around.
Don't let yourself be pushed around, precisely. Because if it really is that great, there will be another offer or another product or another solution that comes along afterwards.
And if somebody doesn't appreciate the fact that you've pushed back and said, I'm not ready to do this now, then obviously that's another red flag.
100%. Right. Absolutely.
Okay. Look, I've got a number of things to look out for that I want to run through with you a little bit later on. I'm going to give you a heading of perhaps things that people should avoid or, should be aware of. Okay. And we'll do that after the news in a few minutes' time. Just quickly before the news, what kinds of questions, is there a top 5 questions that you would sit and expect to ask every client? Is there anything that you could just quickly run through?
Well, if we're talking about savings, timescales, amounts, your attitude to risk, and again, do you understand what that means? How long are you planning to live in the UAE? There's many questions. When are you planning to retire? Where are you planning to retire? Again, we mentioned children earlier, but that's obviously a very key reason that most people save for, because they want to put their children through university.
Mira Business FM.
So the Morning Drive, I'm Tim Elliott talking to James Thomas. Money is the subject for this segment. Financial scams making headlines recently. 2 stories in particular making the news here in the UAE. We've been talking about those this morning. It's the figures involved, as much as £200 million sterling. That's £1 billion dirhams, which really makes you think about the impact that this could have on people who have made an investment as part of an investment of that size. James Thomas is with me. James is a Dubai-based independent financial advisor. He is also a consultant. We've been talking about how to properly vet, what to expect when you meet a financial advisor. He's been kind of outlining some of the pitfalls and what you should be asking and what you should be asked as well. James, I guess when you hear stories like this, and this is 2 stories just fairly recently, they come up regularly, it's kind of a double-edged sword, isn't it? You must be thinking, oh no, not again. But I guess in there for you as an independent licensed advisor and an honest financial advisor, there's a backhanded compliment for you.
Yeah, thank you.
There's kind of an opportunity there. But your first reaction must be, why does this keep happening?
100%. I mean, that is the overriding response. It's just so sad. These poor people have lost potentially their life savings, and completely unnecessarily. You know, there's many advisors here that would have given them some great advice, some alternative investments, and put a much better plan in place for their future. Instead, they're now having to fight various legal battles in the hope of getting something back. But the sad reality is there's probably little or no funds to be returned to them.
And it's just occurred to me, really, in a lot of ways, I've known you for a long time, and I figure, do you find in your relationships, you've been in the UAE for, 21 years, but you would, I'm sure you would develop a personal relationship with your clients, customers.
Very much so.
I mean, because you have to constantly
Yes.
go and talk to them, see what they need, what they want to change.
Yeah. I mean, obviously, some you become more friends with.
Yep.
Others, it remains a professional relationship. But absolutely, the keystone of our business is regular conversations with our clients, regular reviews. It's one of the things that we're assessed upon from a regulatory point of view, because look at your circumstances, they change. If I haven't met with you, how on earth will I know what has happened and then be able to advise you accordingly? What advice I gave you 20 years ago is not appropriate to where we are now.
It goes back to the old story of when you get your first bank account, you probably have a relationship with your bank for a number of years. And in many cases, it's still the case, isn't it, that if you join a bank and you're kind of okay with what they do, you're going to stay with them for life.
Yes, absolutely.
It's kind of how financial planning and activity works.
It is, absolutely.
It's in step with your life.
It's in step with your life.
Right.
Yeah.
Okay. Let me throw some pointers at you here. We've talked about two particular stories this morning. The first is it was a UK company operating here who have shut down. The second was a broker operating from a virtual office here in Dubai, offering again through sales agents, telesales agents, unlicensed, they would cold call, offering high returns. Those are really the two stories. The thing is, there's very little difference between them.
Yes.
There's massive differences in the style and the amounts, but in the end, it's the same. People have lost money. And that's what we have to do, I think, to try and get across the moral of the story, the things you should be looking for. I'm going to give you a headline here. If you just flesh out the details.
Yep, okay.
You're approached by an independent financial advisor, an advisory firm, and they're pushing expensive, high-fee investments. Your thoughts?
Why?
Okay. That'll do. Advisors make money in a number of ways.
Yes,
we
and
know
again,
that.
I always say, just to practice, flesh that out a bit further, I'm not a charity. We're not charities. There should be some fees. There should be some charges. But again, they should be explained to you. If someone says there are no charges and then we are not earning anything, again, that would be almost as a bigger red flag as the alternative, because we are not a charity. We're not paid by a government entity or whatever it might be. We will earn a fee, a commission, or charge a fee for our time with our clients. So, and that fee, I would hope and believe, is fair recompense for the work that we do.
The point to be made here, isn't it? I think people often look at financial fees and think, oh, it's money for nothing. And I would kind of combat that by saying, well, why did you ask somebody to do it for you?
Yes.
Why didn't you do it yourself? And I guess that would be your response, probably slightly more politely put.
I use other professional services. If you go to an accountant to do your tax returns, if you go to a lawyer for conveyancing, that would be the most common. They would charge you for their time.
Okay. What if an advisor avoids clear fee explanations? How fast should you run?
As fast as you possibly can. And again, because going back to our conversation before the news break there, you will receive a compliance call asking you to confirm your understanding of the fees that are attached to any product that you're recommended to invest into. So if I have not explained those to you, that will be a huge red flag, and I will then have to explain to my superiors as to why I hadn't done that. Now, it may be a misunderstanding. That is often the case. But again, if it becomes a regular occurrence, then that would be...
There would be red flags in your system.
Absolutely.
Okay, so you're promised guaranteed, and I emphasise that word, high returns.
Again, be very, very suspicious. It's the key word there is high returns. We do have products that offer a guaranteed return. Now, often they will maybe have particular caveats attached to them, but there are fixed term deposits that do offer a guaranteed return. Banks regularly offer them, as do other institutions. So there's not necessarily anything wrong with the word guaranteed, but it's the level of the amount that's guaranteed is where the concern generally arises.
Yeah, and if you tell people that, I don't know, we can beat the market, I can predict the market, then that would be well, how do you do that?
Again, unless there's a crystal ball somewhere that I've never been able to find in the last quarter of a century doing this job, yes, I would always argue that with time, markets generally go up. Even if we look back over the last 25 years, we had the dot-com bubble burst in the late 90s, early noughties. We had obviously the 2008 crisis. We had the COVID situation. So markets can fluctuate significantly. But if you have time and are able to leave your investments where they are, most of the time, more often than most, they will come back and grow for you.
Okay. The financial advisor that you are speaking to, maybe he's cold called you, maybe has approached you in any number of different ways these days, uses high pressure sales tactics. You have to be ready for that.
You do have to be ready for that. But if they are doing that, again, I would walk away. I've never, ever used that approach. Yes, I may have. You need to, is it a fine balance? Most people will know they need to do something for their financial future. And the analogy I like to use, if you've got a to-do list, it's probably 5 or 6 on that list. It never reaches number 1 because the children need to go to school, you need to go to work. There are other things in life that need to be organised.
Yeah.
So it may need a gentle push. Now that might be a regular, just a polite phone call, WhatsApp, email, whatever it may be. But if you're getting bombarded by phone calls, by WhatsApps, by emails at all times of the day and night, then to me that is very concerning.
So you need to give people space, you need to give people
Yes.
time to think. Okay.
Yeah, absolutely.
What if somebody's discouraging you from asking questions? I'm not even looking at you. I can see the look in your eyes without even looking in your direction. Yeah. But that's a huge red flag.
Huge red flag.
Yeah. Okay. History of complaints. I mean, this goes to something we haven't talked a great deal about, but it is that level of, if you're going to spend money, if you're going to buy a car, for example, probably the second most expensive purchase most of us would make after a property. Most people would go to the showroom, talk to the salesperson, maybe take the brochure, would probably take the car for a drive. It's the research, isn't it? The practical research that you need to do. And you can find out about the history of complaints about a particular, in this case, financial advisor, by doing some research.
Doing some research. Again, speak to the regulatory authority. They will happily confirm that information to you.
Okay, and ask for qualifications.
Yeah, if you're really that concerned, then yeah, absolutely. Do that level of due diligence because we'd be more than happy for you to do that. Because again, if a client understands and has done their research, knows what they're getting into, they're far, far, far less likely to stop whatever they're doing, to have concerns after the event, and will become a long-term client that you can work with for many years into the future and build that great relationship that, as I say, that's how the bedrock of my business.
I'm going to put these 2 points here together, and these should be clear as mud, I guess. But if you're pushed towards frequent trading, or if you're asked to make payments directly to a particular advisor, that again,
well, we're not allowed to accept clients' money, so
that's the point.
If you tried to send me money, I would Well, I wouldn't give you the bank account details. I don't actually know our company bank account details because we're not allowed to accept clients' money. We are a brokerage. Your money goes from you to the institution directly, and it never comes into the advisor's bank account.
And that's a simple regulatory procedure.
Simple regulatory procedure,
right.
Absolutely.
Okay. Investments that sound too good to be true probably are?
Probably are.
Okay, that's simply put, I suppose. Finally, what advice would you have to somebody who is wanting to do something when it comes to protecting yourself from financial scams? Not everybody is trustworthy, I suppose. So are there 3 or 4 things that you would suggest? Anybody listening to this now is thinking, well, I do have an investment I'd like to do, but what should I do first? Have you got like a mini checklist you could put forward?
I guess it's dependent on what you're looking to do. But yes, speak to some people. Go and get some advice. Don't just come to me. Come speak to multiple advisors. Get a flavour for what is available in the marketplace, and then just tailor that down to what is then the right advice for you. Okay. And one of the things that I've always pondered is, and it's the impression of selling. It's the urgency of selling. It's the speed that somebody is able to think far faster than me and come up with responses to my questions. And it's very easy, isn't it, to get swept along. It is.
So there's an element of, I suppose, self-control when it comes to, don't be fooled is probably the answer.
And I guess the flip side is don't procrastinate forever. I mean, again, I would suggest that if you're already having those thoughts, there's probably an argument you need to be doing something. So don't put it off for years into the future, because by doing nothing, you are actually harming yourself from your financial future. Yeah. But there's a difference, as I mentioned earlier, to someone who's absolutely bombarding you with calls, with messages, with constant communication and badgering. If someone calls you once a week, once a month, whatever it might be, I think that's a fairer or a more manageable level of communication.
Right, okay. And that's kind of an on-the-level type very often. That, look, have you done anything yet?
Yes.
Is there something you need to do? Can I help you with something? Without a particular offering in mind.
Well, absolutely. I always sit down with a blank sheet of paper. We have a fact find. There's nothing on there other than it's for us then to ask the questions and see where the conversation goes. And we've discussed many times, I always start with the basics: so life insurance, medical insurance, critical illness planning. Have you got those foundations of your financial structure in place? Because the rest of it will collapse if they're not there.
Right.
Then it's to talk about 2 forms of saving: lump sum, regular saving. Do you have a lump sum? No. Okay. Do you need to build one? Yes. So how are you going to do that? Save monthly. The other wonderful phrase: pay yourself first.
I was just going to ask you that, actually. I think for anybody that hasn't heard that phrase before, it was a wise old financial friend of mine from years ago said 2 things to me, and one of them was pay yourself first. And I'm looking, thinking, well, what are you talking about? And he said, look, save your 10%, your 20%, whatever it is that you want to do. That's down to you. It's not up to me to tell you. It's up to you to decide. And that goes back to your point there, of course. And then with the rest of your money, do it. Whatever you want to do with it, you do it.
Again, absolutely. And we can sit down and we can do a very detailed calculation of what your number is. That is to say, what do you need to accumulate when you wish to retire to produce the level of income that you want to have to retire on. Or you can simply say, as you've just described, well, at the that number is the objective, but actually at the moment, I can afford to save 10%, 20% of my salary. Again, if we're both from the UK, if you're a higher rate taxpayer, you would pay 40% of your salary to the government.
Yes.
So if you're able to save even half of that, you've still given yourself a 20% pay rise compared to what you were earning back in the UK, and still putting a nice chunk of money aside each and every month towards your future. again, no right or wrong answer, but all of these things, it's just having that thought process and that conversation and being comfortable with what is being proposed to you as opposed to being pressured into doing something.
Okay, so let's just wrap things up. I guess really it is a question of it's up to you. Don't be pressured. Expect to be asked questions.
Yeah, and some of those questions might be very personal because we need to know how much you earn, what are your outgoings, and that's a great question because people often don't know what they spend their money on. So if nothing else, it helps you to assess where your salary goes each and every month. But yes.
So it should be, when you meet a financial advisor, it should be almost an exercise in budgeting.
Absolutely.
Before you do anything.
Yeah, that's a huge part of the process.
Okay. Anything you would add? I mean, I feel for people who have unfortunately lost money in this, and my hope is there will be some recompense at some point.
Yes.
But for anybody thinking, okay, I need to be doing something, what would you add to the discussion today?
I think just to reiterate what we've discussed, talk to some people, do some research. Make sure they're qualified, make sure they're regulated, and be comfortable with what you're committing to.
Do your research, review documents, think it through. Don't be afraid to walk away.
Don't be afraid to walk away, and don't be afraid to ask questions. Please, please, please ask me some questions. Because if you don't understand, it's nothing worse than committing to something that you're not 100% confident in or comfortable or understand. And there's no such thing as a stupid question.
No.
The worst is far worse not knowing or being unsure of what it is that you're actually investing into.
Forgive me for asking, but I know. Do you know what we should do? This is obviously being filmed and recorded at the moment. We should do an extra little film out there and go to your briefcase and take out that dusty old file of documents, blow the cobwebs off, and just display those. But yeah, there you are. James Thomas is an independent financial advisor, a consultant. He's based here in Dubai. James, I've really enjoyed talking to you. Thanks
Likewise.
for joining us.
Thank you.
Mira Business FM. You can watch us on YouTube, join us, let us know what you think. And that's it for today's show. Inzamam Rashid has Daybreak after the news.
Mira Business FM.